Good morning, everyone. Welcome to the Stock Market Morning Prep video for Tuesday, March 10th. Well, we did get that retracement that we were looking for, and it was a weak rally going into yesterday morning. But nonetheless, the markets did rally about 38 to 50% in most of the indices that we follow. I will show that to you on a daily chart. So that was good. Now, what I was looking for was a little bit of failure this morning. Unfortunately, the markets in the overnight session really have taken it on the chin. The ES is down 18 handles. The Russell's down 14 and a half. You got NASDAQ down 34. So unfortunately, that's exactly what I was expecting, but I didn't want this to happen in the overnight session, so it gives us an opportunity to get short. Now, we're going to be in the hole, opening in the hole first thing in the morning, and obviously we do not want to look to get short. So we're looking for any type of rallies into resistance for the trading day today, and we will look to short the market. Okay, that's what I'm looking for this morning. And again, it is unfortunate that the markets have already made a huge move in the overnight session, and that's really what has been happening of late. And it's it's kind of like kind of sad when you wake up and say, wow, like again, if you are holding positions and you came into the day short, well, you're making money. But it's a catch-22, right? You take it either one way or the other, whether the markets move against you and you hold positions, or you start the day flat, which I prefer to do so. All right, so I wanted to go look at the tech sector and financial, see where they are, and then let's go into dive into the dailies in the indices. The indicators are really nothing really happened. McClellan Oscillator was, I think, down 40. Nothing really big to write home about, so I'm not going to show them to you today. But I want to show you the XLF. And we had a nice move up from this downtrend, alleviating the lower lows and lower highs, the bearish symmetry, and now we rallied. And I showed you this little bull flag here that we had, and we kind of popped out, and then we failed again. So now we're on this, sort of this sideways horizontal trend line area. We're sitting on the 20, but look at the Bollinger Bands here in the orange, just starting to pinch again. So now it's going to be one or the other. Either the financials start to break down hard, or they start to really rally. Now, if the markets are going to rally, you have to keep that in mind. Excuse me, if the markets are going to sell off, you have to keep that in mind. Pretty much everything is vulnerable to a sell-off. Now, if we just get this light pullback, it's a different story. So we're going to need to gauge where the market is headed and how the market reacts to this either pullback or we get a correction. Now, Jeremy Siegel came out yesterday on CNBC saying that the first time ever he's been cautious and he's looking for a pullback, and some of the other Fed governors saying that they're probably going to raise rates in June. Therefore, the correction is inevitable for sometime in the summer. Now, that doesn't have to happen. Let's not listen to everyone, but you want to be aware that if you are holding longer-term positions, you may want to protect your portfolio, okay, by maybe selling calls against your long positions, bring in some extra income, and of course protection. Now, XLFs, you can see here, right? We took back about half of the candle. Today's going to be an important day, guys. Today and tomorrow, I think, because if we start to really break down, we're going to lose some key areas of support. Take a look at XLK, just price here. With beautiful, beautiful lower lows, lower highs into the symmetrical triangle. We popped out of it. We gapped up above it, which is actually very bullish. And now we're starting to come back in, testing here. Again, nothing really wrong, but we have to watch this, because if the technology sector starts to break down as well, along with the financials, then I think the markets may be in trouble, giving us a little bit of a sign. Spiders. Okay, take a look at this. Again, we took back about 50% of this. Now it is bouncing again back into this resistance zone. But if we lose this 50, if we take out the low on Friday, then I think it's pretty much safe to say you're going to see that 200-day moving average as your next downside target if we take out that 50. So watch the 50-day 206.88 for the next couple of trading days. Transports. What can I say? I've been telling you that this is a week. The leader of our five sectors that we follow. Indices that we follow. It is now breaking down, and really a weak bounce here tells me that I think we're going to see a little bit more downside, at least for a few days. We'll see what happens, and we'll reevaluate. But sometimes when you get pullbacks turn into corrections. Remember, we haven't had a 10, 15% correction, and I believe well over 5 years or since this recovery has started in 2009. So it's not healthy for the markets not to pull back. 3-4% correction is really not even a correction. It's just a mild pullback. Right? Take a look at the IWM. Another leader did come back 50%. Now is above the 20-day moving average. But again, if we lose Friday's low, I think Friday's low in all of the indices that I'm showing you is going to be key and pivotal. If we take that out on a closing basis, look for the next downside target, which would either be the 50 or the 200-day moving average, depending on what index you're looking at. Diamond, same thing. 50-day moving average sitting on the low from Friday. If we take that, if we lose that, the 200 comes into play as the next downside target. And then last is going to be the Qs. You could see here. Now the Qs, obviously, you could see this has been holding up relatively well than the other four indices I just showed you. We also have the Bollinger Band starting to pinch here. And you can see 50-day moving average comes in at 105.12. If we lose that 20, the next target would be the 50. Okay? Keep that in mind. Write it down. I have targets on my charts to see where I am at all times. Keep an eye on that transports, because if the transports start to break down, you can see the banks and financials and some of the technology sector, they start really losing it. I think we can get a really quick move to the downside. Okay? Have a great day, and I'll see you tomorrow.